Hi everyone, please take note of the following disclaimer. Please note that this video is for informational, educational, and entertainment purposes. It does not constitute financial advice. We are not registered financial advisors. Hello everyone, welcome back to the channel. In today's video, I want to talk about the perfect PII portfolio construction, how to build and maintain your first or ongoing PII portfolio, right? So this is actually a top question I get during my one-on-one coaching sessions. A lot of people are like, okay, I like PII, I get the idea. There's so many funds to choose from. How do I get started? How do I choose which funds go in my portfolio? So that's what I want to talk about in today's video, to maybe go through a couple of points here to help you with that. Of course, the only person that's going to be able to build a perfect portfolio and build a portfolio is you. This is do-it-yourself investing. But let's go through a couple of points which I think are important and to think about. So the first point I think is very important is start with a solid foundation, right? You got to build your portfolio from the bottom up, right? So when I say solid foundation, think of foundational core positions in your portfolio that you could buy and hold forever, that can never be wrong. Think of these like the pillars of your house, if you will. You could also think of the story of the three little pigs, right? What happened to the pig who built his house on straw or wood? They got destroyed, but the guy who, the pig that built it with bricks, solid foundation, was able to withstand the wolf, right? So think of that. So always start with a strong foundation or foundational positions, things that are index based, diversified, things you feel like you could buy and hold forever, things like the four horsemen, the four defensemen, for example. You're going to have to ask yourself also as an investor, and this develops with time, what are your convictions as a long-term investor? What assets, sectors are you convinced in? Do you have any special convictions? Normally when an investor is new, you probably shouldn't have any convictions, and that's okay. It's normal. So you will go for diversified or index-based funds, right? In my opinion, if you buy like an S&P 500 type fund, NASDAQ 100, even more diversified, there's other ones like HDIV, for example, you don't really have a specific conviction, and that's 100% okay. It's something you can never go wrong with. But just remember that if you're going to start choosing sector specific funds, and this doesn't just go for income or PII, by the way, just investing in general, sector specific stuff or a single stock specific stuff, you better make sure you know you have conviction in that sector or that company, right? Another thing is, remember that risk is really in the eye of the beholder, just like beauty, right? So I think risk, that term is very, very misunderstood in investing. In my opinion, the biggest factor when it comes to risk is not stupid analyst ratings and risk ratings. I think those are nonsense. The most important thing, in my personal opinion, is duration, right? Is duration. How long is this money going to stay invested? 3 months, 6 months, because you're going to need it for a down payment on a house or a car or something? Or this is a 10, 15 plus, if not forever, I'm holding this portfolio forever, which, by the way, is so much easier with PII because you're constantly getting distribution income, which means you never have to sell anything, right? That's a side note, just another privilege and beautiful thing about PII. But when it comes to risk, remember that the time horizon, your time frame, is the most important thing in my opinion. There's also the accounts, right? So your TFSA, the RSP, cash account, and for my American friends, the Roth, the 401k. So what are my goals for each account? So establish those as well. Maybe your RSP is going to be just long-term savings and safety net. TFSA is going to be your cash account, your cash cow account. That's where you're going to want to generate more income because it's tax free, for example. So, and then there's your cash account where all the income is taxable. So maybe because you're in a very high tax rate right now, you're in the height of your career, maybe you'll go with growth funds or funds that have lower income or in the cash account, or no income at all because you're in a high tax bracket. So maybe so you could do it that way. So another thing to consider is the accounts as well, the goals for each account, including tax considerations for your cash account. I'd like to thank Moomoo for sponsoring this video. If you're Canadian and looking for a new do-it-yourself broker, or you're curious to try another broker, consider Moomoo. As usual, they have a lot of sign-up and welcome bonuses for new users, like cash bonuses for deposits, cash bonuses for if you're transferring from another broker. You also have 6% interest on cash just sitting on your account, up to $10,000. And in case you didn't know, they have 0 exchange rate fees, everyone. So if you want to convert, from Canadian to US, because I don't know, maybe you want to try your own options, writing your own options if you're brave. They also have a very advanced options trading platform. So check it out. And in case you didn't know, they also opened a physical store in downtown Toronto if you want to go pass by. So yeah, check out all the details here. Click on the link. You got to see the PII/Moomoo at the top of the page. I'll put the link at the top of the video description and in a comment below so you could check it out. Now, let's say you know more or less which foundational funds you want to buy, which ones you like. The million-dollar question is, how much do you allocate to each fund? How many do you get? You get 5 funds, 5 ETFs, 10 ETFs, 15 ETFs, just one. And which ones you get and how much you put in each? Well, I think the thing that I look at personally, and I think the easiest way to start is go with percentages. Go in terms of percentages, right? So I'm going to put 15% here, 15% in this one, 30% in this one. So that's an easier way to manage it, or at least start when you're building your first PII portfolio. I think that makes quite a lot of sense. And a lot of, this is a very common question I get during my sessions as well. Okay, I like these 5 or 10 funds. What percentage do I use? Well, the real answer is you're going to have to figure that out on your own. There is no right or wrong, but once you break down and understand each fund, it gets easier to do that. I know it's tedious, especially if you're newer and you're kind of newer on how these funds work, because each fund manager has a different strategy. This is important things you need to look into, and obviously watching my videos, that's what I try to focus on, educating you on the strategies and the technical part about it as well. But how do you choose your percentages? That's something you're going to have to decide. But thinking in terms of percentages is much easier. And by the way, one of the core features in the Ultimate DIY Investing Package, which is on version 7 right now, my digital product, one of the two, the main one, which is $149 Canadian, comes with lifetime updates. You only have to buy one. I know I'm plugging in my product, but one of the features that many people like, and the feedback that I got, is that there's plenty of example portfolios that could help inspire you, or at least give you some ideas in terms of choosing the percentages, right? So only you could really decide the percentages. But in this product, the Ultimate DIY Investing Package, which you get on our website, passiveincomeinvesting.ca. And by the way, I'll show you some of it now, but if you just click on the product, by the way, there's over 400 reviews. These are real. There's a video right here, a YouTube video, which goes into detail from A to Z what this product is. But I'll showcase you, I don't know why it's flashing, but I'll showcase, for example, the section where there's sample or example portfolios. And this is for both on the Canadian side and on the US side. So one of the sections, amongst others, you could see what they have here, is Canadian sample portfolios. So I have some examples for portfolios that focus on income. Then I even have a streamlined portfolio. All these example portfolios, I've tried to make them, they are all 10 holdings or less, 10 ETFs or less. And then there's even streamlined versions which have less than 10 holdings. So there's a portfolio if you're looking for income. There's a portfolio if you're looking for low volatility income. There's a portfolio if you're a bit more aggressive income. One that also focuses on growth oriented, aggressive growth, dividend stock focused, or a hybrid, a mix of everything. So I'm very proud of this product because I think it's very useful. This could at least give you a starting point or some ideas. And there's other cool sections like the covered call ETF guide, where you have all the lists of covered call ETFs out there. You're trying to build the perfect PII portfolio, you could search individual cover call ETFs. You could sort it by index, by if it's diversified, if it's based on an index, if it's based on a certain sector. You could quickly sort through a sector-specific cover call ETF, right? Whether it's financials or healthcare, a single stock one, fixed income, the crypto ones, etc., etc. So I have this Canadian cover call guide and US cover call guide as well, where I have most of the cover call ETFs there, sample portfolios as well to help you get started at the very least. So hopefully this video was informative for you. Another reminder that I do offer one-on-one coaching sessions in case you want to pick my brain and ask a bunch of technical questions. You could book a session with me. I just opened the sessions for April, by the way. But I'll just leave you with this, guys. You got to remember that there is no the pursuit of the most perfect portfolio is an eternal pursuit, right? There is no right or wrong when it comes to investing. There is no best. You're gonna have to figure out what's the best for your situation. And trust me, as every month that goes by, as you gain experience as an investor, you're gonna know exactly more what you want. Your convictions are gonna develop, and your convictions are gonna change over time. And you could always tweak your portfolio to make it perfect for you. Okay, there is no perfect portfolio. It's gonna evolve over time. You're gonna have the experience. You're gonna be okay. You're gonna be fine. You're gonna be a master. Trust me. I know it is hard to get started, but trust me, in the PII world, in the income world, it's never been easier to be a PII or income-oriented investor. A lot of this great stuff did not exist 6 years ago when I started. Okay, so you guys have no idea how lucky you are to have some of these great funds, these great foundational positions now with the cover calls and the leverage, which have amazing total return income, and the total returns are good. So remember, the most important thing is to get started. Take that leap of faith. Go slow, and remember, build a strong foundation first. You're going from the bottom up. Don't just chase things because they have an enormous yield. Then you find out you're really investing in one stock, in one company, and because you have a single point of failure, it's much risky. So start with core, strong foundational positions, and trust me, with time, your convictions are going to grow. Your convictions might change, and then you add more sector specific things or single stock specific things if you have that conviction. This comes with time and experience. So yeah, let me know what you thought of this video. Any other points that you have to add, especially if you're an experienced PII investor. You've been with me for a really long time. I know many of you have been watching for years and years. You already, some people started their own YouTube channels, right? Like Paul and Perry, etc. JJ, there's so many of them now. So if you're experienced PIIer, let me know. Drop a comment to maybe tell newer investors maybe some of your pieces of advice that I didn't cover in this video to add that maybe helped you. That would be really appreciated. And as usual, everyone, take care, stay safe, stay passive, stay honorable. See you next time.